Let's be honest, most people trading crypto are actually losing money, and the reason is simply because they are just guessing or they do not really understand how to navigate the space. In this video, I'm going to be showing you step by step how to make money trading crypto. And even if you are a newbie or you've never traded before, then this video is for you because I'm going to be breaking down every single thing in a very basic step by step, so you'll be able to follow along. If you're new to this channel, my name is Raymond, and on this channel we talk about cryptocurrency related topics. If you like this type of content, make sure to join this community, give this video a thumbs up, subscribe, and stay tuned. Without making any much ado, let us now dive into the matter. So let's clear the basics first. What crypto trading is actually is simply buying coins like Bitcoin, Ethereum, Solana, and several other coins that you find in the coin market cap list or you find in the space, buying them or selling them when the prices go up or when the prices go down. That is what simply crypto trading simply means. There are different types of ways, two major ways to trade crypto. We have spot trading, we have futures trading. I'm going to be explaining both of them right away. Starting with spot trading. Spot trading simply means buying a particular coin, holding it for some time in your wallet, wait for it to appreciate in value, and then you sell that coin. Take for example, if you bought Bitcoin when Bitcoin was just $10,000 per coin. Right now it's sitting around $123,000. So it simply means that you would have made $110,000 in profit by just holding that same one Bitcoin. Now, if you bought Bitcoin when the price is $150,000 and eventually goes down to, let's say, $100,000, it simply means you've lost about $20,000, but you've not actually lost it until you sell off that Bitcoin. If you decide to leave that Bitcoin in your wallet for the next 5 years without doing anything, and the price eventually goes up to $1 million, it simply means you've made extra 900k. So that is simply how spot trading works. It is just about buying a token or buying a coin, leaving it in your wallet, sell when you feel you are profitable. Now the golden rule right here is you are never in a loss until you actually sell at a loss price. By the way, every content I put out here on my channel is for education purposes only. I am not a financial advisor, so make sure to be very diligent with what you do with your money. Now let's go back to futures trading. Futures trading is a little bit more riskier when compared to spot trading, but as it is, the higher the risk, the higher the reward. Futures trading involves using leverage to trade. In other words, you are now speculating the price of a coin. How futures trading actually works is that you can say the price of Bitcoin is 120k at the moment. You're anticipating that it is going to go up to 121, 122, and you go on a long. It simply means that if you are correct by your prediction, you get rewarded with USDT for making the speculations correctly. Also, if you're wrong, that means you would also be at risk of losing some USDT for making a wrong speculation. That is how futures trading works. Now, trading futures can be highly rewarding, like I said, and it is a faster way of making money while trading in the crypto space. Also, it is the fastest way to also lose money. So you need to be very, very careful, and you need to have some level of experience to dive into futures trading. But don't worry, I'm going to try to break it into smaller units in a way that you understand in this video, and that is why I'm making this video. First of all, you need to have an account with a centralized exchange that offers you the ability to buy these tokens to speculate on their platform. For me, I use the exchange called Weex. You can find the link in the description of the video and you can sign up. Once you sign up using the link in the description of the video, you're going to be getting lots of bonuses for using my affiliate link. Now, once you sign up with Weex, then you'll be able to make deposits into your account. I'm going to walk you through how to do all of that in the later part of this video, where I would hop on my phone to show you a practical step by step how to do that. but let's finish with the concept. Now, there are three basic types of traders when it comes to futures trading. You have the day trader. Now, the day trader takes trades per day and closes the same trades in a day. So you can just buy a token and maybe within 24 hours you are closing out that same trade. Those are referred to as day traders. You also have scalpers. Scalpers even make faster transactions. They close trades within minutes, within seconds, even within few hours. Those are scalpers. So you can actually monitor the movement of a market and then take advantage of the movement very fast, hop into the market and hop out of the market. Those are referred to as scalpers. Then you also have swing traders. Swing traders have the audacity to hold trades for a longer period of time. They can enter a trade and hold it for more than a day, 2 days, 3 days, sometimes even up to a week. Now, depending on the type of leverage you are using, that will determine how longer you can hold a particular coin or a particular trade. Let me quickly explain what leverage means. Leverage is simply a multiplier effect to your funds. For example, if you have just $100 and you want to take a trade, you can do a 10x of that funds. It simply means you are borrowing another $900 from the exchange. So 10x of $100 is now $1,000. Now they are adding another $900 to you, which you do not actually have. But the thing right there is that you now take that trade as if you have $1,000. But if the market goes against you and you are losing $100 out of that $1,000, the exchange would first of all take off your money and end that trade. It simply means you have reached the liquidation price of that trade. Now, liquidation is the major risk that is associated with trading futures, like I have explained. So the liquidation price is the price at which you lose the actual fund or the margin that you use to enter that trade. Now, different exchanges offer different leverages for a particular token. So you need to be very careful and very wary on the type of leverage you're using per time. Of course, the higher the leverage, the higher the risk. Also, if the market goes in your direction, that means the higher the potential profit as well. Enough of the theory. What I'm going to do right now is to hop into my phone and show you exactly how to trade futures. And I'm going to be using my phone just to let you know that you could do this with your mobile phone. So even if you don't have a laptop, you can actually trade crypto with your mobile phone. Whether you're using Android or iOS, it doesn't really matter. So you can be able to use your mobile device to trade. So I'm going to walk you through how to do that step by step. Now let's go into my phone. Now right here, we're going to be using this exchange called Weex for this tutorial. So like I said, if you use the first link in the description of this video, you'll be able to get signed up with Weex and all the bonuses. So I'm going to open right here and show you guys how to navigate. Now the first thing you're going to do is for you to go over to deposit, and then you're going to select the network, copy the address, and then make deposit into your wallet. Make sure that you are sending the same coin, the same USDT with the same network. Double check everything and be sure that everything matches. Now right here you can see these options here where you have futures. When you select that, you will see different coins that you can trade per time. You can see BTC, ETH, and several other coins listed right here. Now the way I take my trades is once I come over here, then I'm going to click on where you have the price change. Once I click on it, I'm going to see the coins that are getting lots of attention at the moment, or lots of movement or liquidity. Now you can see this one right here, Giggle, has done 35% in the last 24 hours. ASPU USDT has done 36%. So what I usually do is I scroll down and tries to pick any coin that catches my interest. For example, I'm looking at this ALU USDT, for example, and I can see it has done 9%. And I like to go with meme coins. What I consider meme coins are coins that still have 2 decimal digits, like 0.02, 0.01, 0.00, and stuff like that. But that is not to say that you cannot trade coins that are above $1 or $5. But I'm just showing you an example of how I approach this sometimes. So I open up this chart here, this ALU, and then I try to look at what the chart looks like. So from what I'm seeing, I'm watching this on a 15 minutes time frame. You can see it has done very massively from 0.021799 to 0.023687. Now I would look at it from a 4 hours time frame, and once I click on a higher time frame, it's going to show me a bigger picture of what the market is looking like. So you can see the all-time high, or at some point this market reached 0.029974, but right here it's still sitting at 0.0237. all right, now I'll look at it again from the 1 day. So if you look at it from 1 day, you will see that this same coin has actually reached 0.064205. okay, and after which it started tanking down. Now right here is as if it wants to recover back. So there is no guarantee, but from what I'm looking at right now, it feels that this is a good market to trade at the moment. So I'll go back to my 15 minutes time frame to look out for the best time to enter. So you can see it really looks like this has really moved, but then I would still take a bet for this particular trade. Now I'll go back, then I'll look at the margin mode. Once I click on the margin mode, you will see cross, you will see isolated. Now I usually go with isolated. The reason is because isolated would reduce your risk. Using isolated means that the amount of money you're using for that trade is the only amount you can lose if anything goes wrong. But if you use cross, it means that you are risking the entire funds in your account. So if the market goes against you, you have the likelihood of losing the entire funds. But however, with cross, your liquidation price is further away, which means before you will lose that trade, it might take longer time than when you're using isolated. But for me, I prefer to go with isolated all the time. So I'm going to click on confirm. Then right here where you have 20x is the leverage. So you can adjust the leverage to 10x, 20x, 25x, even up to 50x for this particular coin. Now there are some coins that you have the ability to adjust it even up to 400x or 100x. So each coin has the maximum leverage you can take depending on the exchange and depending on what is obtainable. Anywhere from 10x is a good leverage to use, but if you want to take a higher risk, maybe you can try out like 20x. So for this, I'm just going to leave it at 20x. Right here you have market, you have limit, you have trigger. Market simply means that you're going to enter that trade immediately once you click on the open long or the open short. But limit would help you to set the price at which you want to enter. So if you want to enter the price at a particular point, you can use limit to set it. But if you want to enter that market immediately, then you have to use market order. So I'm going to leave it at market order. Now this radar here is what you use to select the amount you want to risk in this particular trade. So for example, I have 141 USDT available, and you can see the cost at 16%. That means 16% of 141 is around 22 USDT. So that's the amount I'm willing to use to risk for this trade. And you can see that the liquidation price is now at 0.022922. all right, so if everything is okay, or if I want to use a lesser amount, let's say I want to use just 20 USD, I can keep adjusting it until it gets to 20, or let me just use the 22 USDT right there. Okay, and then if everything is fine the way I want it, I'll just click on open long. Read everything here. You will see the amount you bought is 441, the margin is 22 USD, and then the liquidation price is showing you right there 0.022927. So this liquidation price, like I have explained, Once this price of this coin gets to that point, you will lose this 20 USDT that you're using to enter this trade. So I'm going to click on confirm. So you can see the order has been placed. So once I come down to where I have my orders, you can see right there the ALU is showing. So you can see even right now that we're on this trade, we're already 0.59 in profit. Risk management is what separates successful traders from traders who always get wrecked. And here are a few tips you can apply to always master risk management when trading. The first is always set stop losses. What this means is that you already know the amount of money you are willing to risk or you're willing to trade per trade. So once you get your stop loss, you can step back, find out why you lost that trade, come back again and try maybe the next day. The second thing is to not risking more than 2% to 5% of your account per trade. This is very key because your goal is to always protect your capital in crypto trading. Once you lose your entire capital, you don't have anything else to trade with. So even when you find very good opportunities or A setups, you don't have the funds to trade them. So your main goal is always to protect your capital, which is very key. Protection of capital over making profits. Once you have that in your mind, then you know you are on the right path of applying proper risk management. Third thing is to do not overtrade and don't try to time the top or time the bottom. Once your market hits your targets, take your profits and leave. Most traders do not take profits, especially when they are trading crypto, and the reason is because of their greed. Take what the market has given to you because you did not have it even before you started making that trade. That is why most people, they go into profits, watching their screen, and all of a sudden they are back to losses because they refuse to take profits. Always be very, very mindful of taking profits when you are trading crypto. If you find out at any point in time that you are becoming so emotional with your trades, the best thing for you is to walk away from that trade and come back the next day, because trading emotionally would mess up your mental approach to the market. That is how I'm going to wrap up this video. I hope you got some good tips and good value from this video. Now, if you want to join my community, make sure to join the Telegram group. I will drop the link in the description. And if you want me to take you on a one-on-one coaching program where I will teach you how to trade futures, then you can also sign up for my one-on-one mentorship. I will also drop the link in the description of the video. Until I see you next time, keep winning, and thank you for watching. I will see you in the next one.